Sam Kinison said move to where the food is in one of his comedic routines. This is what you need to do here. They're really moving to where the people are. People are on the mobile. That's where they're at. And so that's where they're going to go. That's where they're picking up the revenue. It's a little bit better than it was the last quarter. Still not there. 50% of their users are really on mobile. That's where they need to be driving those ads. But yet they're not picking all of the ad revenue. So lots of upside for them.
So the fact that 30% of the ads came from mobile is probably lower than it should be. Would that be your take, Jeff?
Absolutely.
But it's moving in the right direction. The other thing that Corey pointed out is that the engagement with Facebook looked good from the numbers. And this was a real question going into here, whether people were actually spending time on Facebook like they used to be.
Exactly right. I mean, one of the things that as a salesperson, advertising salesperson, you sell your overall audience and you sell engagement. How long did they stay on your site? Advertisers want users that are really coming back to the site, and when they come to the site, they spend time there so that the advertising message can resonate. So that's a key point that Corey raised.
Well, Paul Kudrowski, another Bloomberg View columnist, has made the point that Facebook needs to somehow convert like into want, into need, into let me go buy it. How far are they in that process from your point of view, Paul?
I think there's still some ways to go. Just on the mobile side, again, 60% of their audience is mobile, yet they only have about 30% of the revenue. So they've got some ways to go there on the advertising conversion side, but they're definitely making the right moves.
Corey Johnson in San Francisco, your thoughts?
Well, so I think the Facebook Exchange product is actually really important in that regard because to Paul's point or to Paul Kudrowski's point, the absent Paul Kudrowski point, the notion that they have to convert like into sell, into buy, well, they're already doing that, and maybe like might not be the best tool for that. But with this Facebook Exchange product, they're able to see what people are doing elsewhere on the web, the way that people are purchasing things other places on the web, and combine that with behavior on Facebook to put the right ads in front of the right people. And we're starting to see that this quarter for Facebook. That's when these product changes took place. And I think you see some of that in these results.
Well, I got to say that for the only person that's probably bought ads on Facebook, and I do that every single day in my own business, and I've done it as a corporate executive, as a CMO, is the system is not set up for that. You can't buy ads to convert to sales. You can only convert them to likes, which is great for engagement. It's great to get people talking about it. It's great to build your community, but you still got to go an extra step, and that's a tough thing for advertisers.
So
that's why
I don't know anybody who puts on those ads. Yeah.
It's just the way their system is built that way. They started as likes, and so they've gone down that path. It's tough for them to be able to entrench themselves back out of that or retrench themselves and then get back into another system. It's very difficult to do. And so the advertisers that are buying aren't big brands here, folks. I mean, as opposed to Google, where big brands are buying those ads. These are mostly small businesses at $50 a day, $20 a day that are purchasing most of these ads.
Well, Corey Johnson, what about Home? They made this big announcement that they were going to launch Home with the Android. How is that doing, and how does that fit into the overall strategy?
I mean, it happened so late that it's not really going to be in these quarters' results. I'm sure they'll say wonderful things about it on the call if they talk about it at all. But the truth is they don't know how it's doing yet, and we don't know how it's doing yet, and it's not going to be in these results. The reviews of the product have been, it's kind to say that they've been mixed. But, we'll see what that leads to in this business. There's so much that we know about their business. That's a fun thing about these new companies is that this information is so new that when they report quarterly earnings, these businesses are still evolving. We can see the changes in the business. One thing I'm just putting in my model was that they had $213 million in payments and other fees. That has mostly been a Zynga business over time and has even been seen as a proxy for Zynga. Now, Facebook has pointed out that it's no longer just Zynga and that, Zynga was shrinking, other games and such were growing. But this is only the second quarter they've ever reported a sequential decline. So I said $213 million this quarter. It was $256 million last quarter. So the payments business, which has been mostly games, is in decline for these guys on a sequential basis. The only time that ever happened was just a $2 million change a year ago. So you might expect things to decline from Q1 from Q4 into Q1, but this is a pretty sizable decline.
Yeah, it certainly is. And the one point that we don't seem to be discussing is the fact that earnings actually missed by a penny, Paul Sweeney. So for all the talk about the shift towards mobile and bringing in more users, they still missed by a penny. And by the way, we're only talking about pennies. They made 12 cents. I mean, this is small potatoes profits here.
Yeah, I think, I think the best you can say about this quarter is it's a mixed quarter. They did better on revenue. They did better on that mobile metric that everybody's focusing on, that 30% number is, but they missed on the EPS. And I think the stock has kind of shown me that. It's kind of mixed here in the aftermarket. So that just goes to the whole challenge for Facebook and for a lot of these new internet companies is they have to execute not just on the top line, but they need to bring it to the bottom line. Now, Facebook's doing a good job, but they absolutely did miss here a little bit.
Well, yeah, let's talk about the trading action right now and head over to Jim Romelli. I'm looking at the stock reaction. It looks like shares are a bit lower after a little pop that we got after earnings. What do you see?
Right, so we saw the shares pop on the initial reaction. We're basically unchanged now, down around 4 cents per share here. Now, we generally see sellers come into the market on a rally after earnings in Facebook. Keep in mind, we've only had 3 quarters of earnings before this one. Now, the trading in Facebook right now would tell you that report is mixed. The options market was implying around an 8.5% to 9% move on this report, and we're basically unchanged here. I'm still short the stock via options. I'm not going to do anything with that position until expiration. I think home, we're not going to see those numbers in this quarter here, but that is supposed to be the next catalyst that grows their mobile revenues going forward here. And the initial reaction to the home app is not good. It's one of the lowest rated user experience apps on Google right now. Terrible ratings and not that many downloads. 500,000 downloads.
Jeff, yeah, you're a man of many opinions here.
Yeah, I think home is home alone right now. But I got to give these guys credit. I think they're the very first company with 30% of their revenues in mobile that's making the mobile transition. You got to give them credit for that. So even though they missed by a penny, you got to give these guys credit for making the jump to mobile, getting there, and 750 million interactive users.
That's a lot of eyeballs.
That's a lot of people.
Yeah, Jeff, I'm curious about your take. You were an executive. Looking ahead to the earnings call, Mark Zuckerberg, what does he need to communicate on this call?
I still think he needs to communicate trust and that we're going to get you there, we're going to work with you, we're going to partner. And I don't think he's been able to tell advertisers that. And so there's been some real issues about where people put their monies as investors and also where advertisers put their money because I still don't trust them.
I wonder if it's because he's so focused on the user and the user experience.
Yeah, and that's fairly typical. We saw that from the Google guys when they came out of the gate. They're focused on the users, they're focused on the experience, they're focused on growing the business, their user base. We've seen that on these internet-driven subscriber businesses. So, it's going to be the challenge is to monetize them over time, either through advertising or merchandise.
Well, if I can jump into what Paul was saying, guys. I think it's similar to what Paul's saying about what they accomplished in a quarter. The company did $219 million in net income, but that's after $130 million in stock comp charges. So really, these guys had net income of about $380 million in a 13-week period for a nascent business. That it's extraordinarily profitable. They still spent a lot of money in the quarter. They dialed back capital expenditures just a little bit, but they're still, in as much as we usually talk about companies when they're investing for growth, when they're like Amazon and they're barely profitable and they're trying to get big. These guys are investing for growth and they're throwing off a ton of profits.